Good evening. The IRS changes position for domestic partners in California filing tax returns. Recording artist Xavier Toscano returns to the studio tonight with his new single, Smoke and Mirrors. Michael Collier and Kathy Bowe stop by to talk about frontrunners. And a federal court judge strikes down California Proposition 8, the state referendum banning gay marriage, on this August 2010 edition of Outlook Video.
This is Outlook Video with Roberta Gonzalez-Gregg and Brianna Gilbert.
Thanks for joining us for the September 2010 edition of Outlook Video, your nationally recognized award-winning show for gay, lesbian, bisexual, and transgender communities. I'm Roberta Gonzalez-Gregg.
And I'm Brianna Gilbert. We're producing this show on the day after Proposition 8 was declared unconstitutional and overturned. In the early afternoon of Wednesday, August 4th, the U.S. District Court for the Northern District of California in San Francisco released Judge Vaughn Walker's ruling striking down as unconstitutional California's Proposition 8, which prohibited same-sex marriage. David Boies, one of the two lead attorneys on the winning side, said during an interview for the Rachel Maddow show, "It's a human rights, it's a civil rights issue. This was a great victory for gays and lesbians and the children that they raise. It was also a great victory for all Americans, for anybody who's ever been discriminated against because they are of a different color, or a different sex, or a different creed. Indeed, all Americans who have an interest in equality." Outlook video cameras were in different cities covering the reaction to the federal court ruling, and Raymond Donald Hong will bring us more details later this half hour.
In a recent ruling by the Internal Revenue Service, changes may affect those of us filing our federal tax returns as California registered domestic partners. In my People Like Us segment this month, I'll be interviewing Patricia Cain and Richard Waterman to learn about the new federal rulings on community income. Join me later in the show.
Quoting from his website bio, "Pop music is the soundtrack to our lives. It has the power to carve events in our lives in stone." We had the pleasure of interviewing Xavier Toscano for our January 2009 edition of Outlook Video, and later in this show, Johnny Zitch will welcome him back to our studio for an interview and a performance of Smoke and Mirrors from his new album. You won't want to miss this.
For all our East Bay viewers, we'll have representatives from the East Bay Front Runners talk with Jay Riley about their group's activities. Jay will interview Vice President Michael Collier and fellow runner Kathy Bowe. For the benefit of your health and social well-being, stay tuned.
I'm Liam Maitland, and you are watching Outlook Video.
Welcome to this segment where we honor the diversity of people in our community, people like us. Joining me today are Patricia Cain and Richard Waterman. Thank you both for being with us today. Now then, you are a professor of law and a tax professor in particular at Santa Clara. And Richard, you're a tax preparer, also in the county here too. Now then, there are some new taxes, which are tax rules which apply to registered domestic partners. Please tell us a little bit about those. Patricia, we'll start with you.
Okay, well, this really started in 2005 when the state of California changed the law for registered domestic partners and put us subject to the community property regime. Under community property, all income, or almost all income, is owned 50-50 by the two partners and should be reported by them. But the IRS originally took the position that although that rule applied to married couples, it would not apply to registered domestic partners. And this May, they changed their mind. They issued a ruling, actually a chief counsel advisory, that says registered domestic partners can now split their income 50-50, which is good news for most taxpayers.
Okay, so good news for most. Rich, will this hurt or harm us?
There's a group of about, I think about a third of the people it will help, and we can probably just say, to keep it even, about a third may have issues with it where things will be worse off, and a lot of people it will be the same. And again, we're still getting statistics on how many people that is, but we've started doing some returns. The IRS has ruled that we can go back to 2007 and actually amend to follow these new rules if we want, if it helps the person. And going forward, starting in 2010, we must follow this new rule with community property, whether it helps you, hurts you, or doesn't make any difference.
Now then, what is the most important aspect of this rule for tax preparers? And I mean, does it make things difficult for tax preparers
I'll let
as well?
Rich ask this, since
Okay.
he's the tax preparer, but I'm going to tell you, I've talked to a lot of tax preparers,
Yes.
and there's a lot of effort, and Rich knows this, trying to figure out what the rules are. Because this is new, and we've never had to do this before, to determine what every item of income is, whether it's community or separate.
Yeah,
That must be a hard nut to crack, especially when partners, such as in my own situation, we have, really quite a different balance of our incomes. Is that?
Yeah, so that's the one thing we're finding for those people who are looking, should I amend my prior year return? Is this going to help or hurt?
Yeah.
We find people where there's a big discrepancy in income, somebody who makes quite a bit more, is especially that are paying higher tax rates, is in the alternative minimum tax, they call it. If you find that you are there and the other partner is lower, generally at the lower rates below your taxable income, not your wages, is below 30,000, let's say, or 35,000, you may see big advantages. We're finding people savings up to 15,000, 20,000 a year in some cases.
My goodness. Well, that could be, that is considerable.
Sure.
That is, and in addition to the income tax,
Yes.
there are estate and gift tax consequences as well that lawyers are really thankful to know, because we weren't sure what the rules were before. If I earn $1 million, I wish I did, but if I did earn $1 million and my spouse partner was suddenly vested in $500,000 of that, we never knew whether that vesting of half of my income in her was a taxable gift. Turns out it's not. The new ruling is very clear about that. So it creates actually a benefit for registered domestic partners and same-sex spouses in community property states that people in other states don't have.
Well, that's very good. Well, that is good news for all of us
Yes.
taxpayers. Okay, well, thank you so much for giving us this very important information. How can people learn more about this?
Well, they could send me an email if they had specific
Okay,
questions, but I
okay.
don't want to be inundated about it. I'm also working with the National Center for Lesbian Rights, NCLR,
Very
to
good.
put some information on their webpage about what the community property rules are and what some of the basic tax
Okay,
questions are.
and we can also check your website too, can't we?
Yeah, you could check our website, which I understand we'll post in a second.
Yes,
Also,
it will.
Pat and I have done a seminar at the DeFrank Center, and we'll most likely do one again at the beginning of next year, when everybody is going to get ready to file.
Good to
and it's
know.
really going to impact us.
Okay, as we get closer to that April 15th deadline.
Exactly.
You'll be popping up again. Excellent. Well, thank you so much for giving us this very important information. And we appreciate you being on our show tonight.
Thank you.
Thank you.